What is an SPV and what does it mean? Hi, I'm Kimberly Shapcroft, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. What is an SPV? Well, an SPV is a special purpose vehicle, and I can safely say it is nothing more complicated than a limited company with a specific purpose. It's one that has one specific SIC code, which is your standard industry classification allocation. That is the number that you put onto your company when you form it. The reason it is a special purpose vehicle is it has limited use. It is not being used for anything and everything. It's being used for one specific purpose, and that purpose is being specifically defined. Now, we generally find with property companies there is probably one of a few standard industry classifications that we need to use. So as you can see on screen now, we have 68-100, which is buying and selling of own real estate. We have 68-209, which is our other letting and operating of own and leased real estate. 68-320, which is our management of real estate on a fee or contract basis. And 68-201, which is renting and operating of housing association real estate. And this SIC code, which is your standard industry category code, is a 5-digit number which is used to classify a business's primary activity. And generally we will see that these are the 4 that we tend to see for property, and these are the ones that the lenders also want to see on your company when you are applying for lending. As you may or may not know, if you are wanting to get lending, it is very important that you have these things set up correctly. If you don't have it set up correctly, then you may need to update it and adjust it on Companies House to make sure that you have got the right things to show the right relevant information. If you find that you've set one up with an incorrect standard industry categorization SIC code, then it's not the end of the world. It can be changed. The only thing is when it can be changed is by doing something called a confirmation statement. The confirmation statement needs to be filed with Companies House, and there is a charge for doing that. So this is the £34 confirmation statement fee, and you'll have to pay that to enable you to change the SIC code on Companies House. The other impact that it has if you do a confirmation statement is it will change your ongoing confirmation statement date, and you'll then continue doing your confirmation statement from that date ongoing into the future. So if you do it today, then it will be 12 months from today that your next statement will be due. One area that is also generally queried is, especially for our SPVs, is when I'm going for some lending, do I need to have all of the directors as shareholders or shareholders as directors? What is the impact? How is it going to fit together for our lending purposes? Well, one of the key points here is generally, or the majority shareholders, a lender will want to see them as directors. It's not a necessity from an accounting point of view or a company's law point of view. However, you may just need to see what lender you are looking at using to see whether or not you need to have more than one of you as a director. In my businesses, we've tended to have the shareholders as directors as well, as it has just assisted us for lending purposes. However, it may be you have someone who is a minority shareholder, they've maybe got 5, 10, 15, 20%. These may not need to be directors and they may be ignored for lending purposes. However, I would always strongly advise you speak to your broker, because your broker will be able to tell you whether that lender is interested in them or not, and if they are not, that's not a problem. If they are, you may just need to provide appropriate information to ensure that you're doing things in line with what they are wanting. When you are getting lending through a SPV or through a limited company, you do need to be aware that there is personal guarantees that will need to be done. Now, this is not an accounting or tax point of view. This is something that the lenders are specifically wanting to get, or in some ways reduce their risk. And the way that they can reduce their risk is by getting the directors, the shareholders of that company to personally guarantee that if anything happens in that company and that company is not going to be able to pay its mortgage, the bills, repay, then they're going to come after you. Now, this is called a personal guarantee, and this personal guarantee is for you as an individual for the company. The implications of this personal guarantee are very much going to be that you as an individual or the director of the company are going to need to go and get some legal advice, and that is independent of the company. So you will generally not be able to use the same solicitors when you are doing this. You'll go and get your mortgage offer, you'll be happy, amazed, you've got your mortgage offer, the property's going through, which is awesome. Your solicitors will be going through all the paperwork. They'll get to a point and go, oh, we need to get your independent legal advice signed off. And you will need to go and get independent legal advice from a third-party solicitor on the personal guarantee to confirm that you understand what you are signing, what you are taking on. That independent legal advice is allowable as a company expense, so that will get put through the company as another expense you're incurring on purchasing that property. And having got that legal advice, that will allow you to go and get your mortgage lending. The other impact that we'll have in the accounts and the tax terms is probably more the accounts disclosure side of things, is that personal guarantee will be shown as a note in the account to say that you, the director, have personally guaranteed an amount of money on behalf of the business. So that will just show as part of the notes after your profit and loss and your balance sheet in your account to just confirm that there are secured debts which you have personally secured. For our special purpose vehicle, we tend to have it that this company will just be for one purpose. It won't have a trading element to it, it will just be for investment purposes. And this should just be something that you are aware of, that you're not finding you're putting everything all together, which may cause you lending problems, because some lenders want to be lending to investment companies, they know what they're dealing with, and if you have a trading element, it's a slightly different loan that they may be looking at providing, which may not fit your criteria. So if you are looking at doing some trading activities as well as some investment activities, you may need to separate those two activities into separate companies, or you may have it in one, the trading in a company, the property in your own name, or vice versa. There is the question of whether going into a company is always going to be the right option, and for some it is not. It should be noted that interest rates tend to be higher in limited companies, therefore it may be that something could be beneficial in your own name, or it may be that due to tax reasons or risk reasons you do want it in a SPV, you want it in a specific company. So on that basis, that is a better route, but just be aware that the interest rates might be a little bit higher. They're not significantly higher as they have in the past. However, there is still that slight discrepancy with there being potentially 0.5% depending on what the markets are doing at the current date you're watching this video. As you can see, there's a few specific bits of terminology there and a few tips and tricks on the lending side of things that fits with how the company fits together, and if you need to be making any changes to make sure that you are ticking the right boxes to get your lending and your company set up in the right way. If you have any questions on how to set up your company, then definitely speak to an accountant or a tax advisor. And if you need to make sure things are going to fit together for lending, I'd also suggest talking to your finance broker to make sure that from all parties' points of view, you're doing things in the right way to ensure that you're going to be able to achieve the goals that you set out to achieve. Hopefully today you've discovered what an SPV is and what it really means, especially when it comes to lending purposes. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing. Let's make tax less taxing.